Well, first of all, let's get your thoughts on the market's trend. I mean, someone said it was depressing. Over the last few weeks, we've seen the market up and down, really lacking momentum on the upside. Obviously, the factors at play are the global issues and, of course, some of the domestic issues. What's your thoughts on the trend we're seeing right now, and is there any catalyst in sight for you?
Thank you very much for your question, Wole. Well, if you say that the market is depressing, I would say to some extent, maybe yes. Because I remember at the beginning of this year, the outlook was that the market would do minimum of 10% upside, and some are even very bullish, saying it would do 25%. But what we've seen is that the market is down. Now, what is the major cause of this is what we should address, and that is just liquidity purely. Because by the time we look at the valuations of what we have on the Nigerian market now and benchmark with the emerging markets, you find that the valuations are very rich. Fantastic valuation, but even if the pricing is good, or if there is no liquidity, there is no liquidity gravitating towards the purchase of these stocks, then what we continually see is that the markets will be perpetually down. And I think another overhang on the market is the consolidation, the recapitalization of the banks that we expect to probably end by the end of this quarter. So by the time all these are taken care of, then we have a clear sense as to where the market is going, and I'm very optimistic that the last quarter of the year will be a good one for the market.
But how do you place that analysis against the fact that right now the market is really dominated by the internationals? We're hearing that close to 70% is driven by foreign inflows or outflows, if you like. So really, it's a question of what those guys are doing as opposed to what valuations or whatever expect on the table right now.
Yes, because they bring the liquidity into this market. In fact, they do pretty much 80% of the market, but they are exposed to forex risk. Let's not forget that the IMF has said sometimes early this year that the Naira seems overvalued. And if you check in the last 1-2 months, if you see the pressure that has been on the Naira, it's almost certain. I mean, if things should go on the way they're going, that definitely the Naira might be devalued sometimes next year. So from the people bringing in dollar to play in this local market, they want to take a step back to know the direction at which your currency is going. Would the CBN be able to defend the currency at the level at which they've done in the past? Is the currency going to devalue? If it's going to devalue, by what extent? So that will make them to plug into their model and still see if the market is good enough for them to come in. But until those issues are taken care of, then I see that the foreign investors will still need to take a step back and be sure of what your currency is doing, be sure of what your macroeconomy is doing, be sure of where your inflation is going and interest rate, and be sure of the direction of the central bank. Then that's when we can begin to see confidence from their own side as well.
Okay. Obviously, one thing that is on the front burner right now is this TIAs involving about 4 banks. Let me get your thoughts. I mean, more so from a risk perspective. For those investing in these banks, what are the key risks that you think are on the front burner, on the table right now that they should be considering?
Well, I think on the financial side, if you want to look at the financial risk, most of the risk has actually been undertaken. Sorry, I've been underwritten. I've been taken care of. But I think what would be the major risk for them will be on the process side. I mean, the operational issue, the operational risk. You're talking of the processes, the people, the culture. How do you match? But when we're talking of risk, we should juxtapose the risk with returns. And by the time we look at the prospect for all these TIAs that have been signed, I believe that the returns we expect way out. I mean, it's beyond the risk that inherent in the transaction. So for me, in as much as every venture you want to go into is risky, but at the same time, we need to look at the returns that we expect from these agreements.
And of course, I think one thing that most people are quite agreed on is the pricing. Many of these deals are done at very attractive prices for those that are acquiring.
Yes, fantastic pricing. I mean, you look at a bank like Intercontinental Bank, and you look at what Access Bank is going to pay, and we look at even the post-merger. You look at getting only 10% of the entity after the merger, then you find out that the pricing is very good. Well, you might look at it and say that the pricing is good, but let's not forget the shareholders on the other side of the market. That means that the people that are selling the Intercontinental Bank now, what are they getting in return? So we should also balance our view to say why the pricing is good for the people that are coming into the bank. Is it good for the people that are exiting or the share?
There must always be a winner and a loser.
Definitely,
obviously.
yes.
I mean, these are markets. Anyway, maybe quickly your thoughts on flour mills. Obviously, the rights issue is more or less done and dusted. We expect regulators to approve that at 62 naira, 20% discount to the current market price. What are your thoughts?
Well, fantastic. 62 naira, that's a good one. Flour mill last year came to the market, they raised about 35 billion, about $230 million, and that tells us that they're actually in an expansion phase. They're really trying to expand the business, and I think they also need to fortify some of the strategic business units, like we saw. Prior to what we saw for their full year, the latest one we've seen, prior to that, we've seen the UNICEF, the cement business, contribute like 21% to the top line, but now, going by the policies and all we've seen in the market, that has come down to like 15% thereabout. So that means that they are losing the market share, and they really need to get the funds to come back to expand their market share, to gain the territory that they've lost, and to be able to do what they really need to do. Yeah. On the valuation for 62 naira, I would say fantastic. That is good. But the ratio, I'm not sure you have the ratio now. Is it 1:3? Is it 2:1?
Yeah, I'm sure we'll get more details on that.
So until we get that, then that's when you can now walk back and say if the valuation is right as compared to the intrinsic value.